The expense ratio of funds is something you may not be paying attention to because it's easy to overlook. But ignoring your investment fees can be a huge, costly mistake. By the end of this video, I'll explain to you what an expense ratio is, why it's important, and how you can use the expense ratio to save yourself thousands of dollars. How's it going, everybody? Welcome back to the channel. If it's your first time here, my name is Jay, and on this channel I give you the tools, the tips, and the tactics that you need to get the most out of your money. And today we're talking about investment fees. More specifically, we're explaining expense ratios. Expense ratios are an often overlooked fee associated with every mutual fund and ETF you buy, and not paying attention to it can be costing you thousands and thousands of dollars over the course of your investing career. So to start off, what is an expense ratio? Simply put, an expense ratio is the management fee that gets passed along to you, the investor, by the owner of the mutual fund or ETF. It's the fee that they charge in order to run that fund. So next up is, where do you find the expense ratio? So before you go to invest, you obviously want to know what the expense ratio is for the fund you're looking at. Thankfully, expense ratios are very easy to find. They're right on the main page of the fund fact sheet that you'll find with any investments. So if we look first at the Vanguard Admiral Fund, which is their S&P 500 index fund, we scroll down, we can see right here that the expense ratio for the Vanguard Admiral Fund is 0.04%. Now, if we look at another S&P 500 fund, this one is from iShares. So again, just two different S&P 500 index funds. There's no difference in strategy or anything like that. But if we look at the iShares fund here, we go down, the expense ratio is 0.10%. That's 0.10 compared to 0.04. Now, for funds that have the same strategy and invest in the same things, that's a significant difference. But if you really want to see a difference, let's take a look at this next fund. This next fund is an actively managed fund from JP Morgan. It's their large cap growth fund. So while the other two were index funds that were passively managed, this one has a fund manager that is always tinkering and trying to get the best results possible. And for that, you pay 0.106% as an expense ratio. So if you're comparing two investments, the Vanguard Admiral Fund and the JP Morgan Large Cap Growth Fund here, you're going to pay an expense ratio that is 25 times higher for the JP Morgan Large Cap Growth Fund than you are the Vanguard Admiral Fund. That's a significant difference in fees that really adds up over time. Okay, so it's 25 times higher, but really, we're talking about 1.06% versus 0.04%. What's the big deal? What is the effect of investment fees on my returns? And I get it, while the numbers may not seem like much, it has a compounding effect. Because not only are you losing out on that 1% each year out of your investments, but it has a compounding effect because you're losing that 1% to the fee, and you're also losing all the growth over the years of that 1% and the next 1% and the next 1%. So look at this chart on the screen right now. I got this from Vanguard, and it shows the effect of investment fees on your investment. If you're paying just a 1% fee on your investment over 30 years, that 1% will have the effect of a negative 26% on your investment returns. So that means if you start investing when you're 25 years old in a mutual fund that has a 1% fee, and you keep investing through, by the time you're 55, just that management fee alone will have been like an anchor pulling down your overall returns by nearly 26%. Now, everyone freaks out when the S&P 500 drops by 5%, but here we are talking about 26% over a long time, but that can be the difference between retiring at 60 or 65 or even 70. So up till now, we've just been talking about the expense ratios, the management fees on your mutual funds or ETFs. But as you can guess, those aren't the only kind of investment fees that are out there that you need to watch out for. So what other kinds of investment fees should you be on the lookout for? Now, the first kind of fee you should be on the lookout for is trading commissions. Trading commissions are a fee that your broker charges you every time you buy or sell a share of stock or a mutual fund or an ETF. Thankfully, due to brokers like Robinhood and Webull, sign up in the links down below, trading commissions are most likely a thing of the past as long as you're using online brokers. Robinhood and Webull really kind of spearheaded the charge for $0 commissions on all your trades, and the larger brokers that are out there have slowly followed suit. So really, if you're still out there paying trading commissions through an online broker, you really need to switch your broker and get to one that charges you $0 trading commissions. Back when I first started investing, back in the day, it was $9.99 for every trade that I placed. And back then, that was considered low. So I would try to save up at least $1,000 at a time every time I was gonna make a purchase of a stock or an ETF, because I wanted to keep that $9.99 commission fee to at least 1% or below of what I was making a purchase of. I wanted to try to minimize that fee. And thankfully, over the years, it got lowered to $7.99, then $5.99, and finally, most everywhere, it's $0. But you kids these days have it lucky with your $0 commissions. Another type of investment fee that you should really watch out for is a mutual fund load fee. Now, these are fees that a mutual fund will charge you per buy or sell of the mutual fund, and they can sometimes be up to 3 to 5%. Again, thankfully, no-load mutual funds are becoming more and more common, but still, it's something you should be on the lookout for, and if you have the option, choose a no-load mutual fund, or better yet, this is why I prefer to invest in ETFs over mutual funds, because ETFs never have a load. And lastly, probably the largest investing fee, the largest investing expense of them all, are financial advisor fees. Now, I'll kick this off by saying if you have a financial advisor that charges you commission on each buy and sell you make with them, dump them immediately. If you're using a financial advisor, you want a fee-only financial advisor. But even if you have a fee-only financial advisor, you want to pay attention to what that fee is, because they usually charge you around 1% or maybe 2% of assets under management. Now, 1% for the services of a financial advisor may not sound like a lot, but that's 1% of your portfolio value. So over time, as your portfolio grows and becomes larger and larger, that fee that you're paying to that financial advisor is also growing and growing and growing. So you can avoid those fees altogether if you manage your investments by yourself, but financial advisors do have their place and a lot of people like their services. So if you are using one, make sure they're fee only, make sure their fees are lower compared to the other financial advisors you look at. And then most importantly, make sure that financial advisor is investing you into low-cost investments. You don't want to be caught not only paying 1% to your financial advisor for their services, but then having that advisor invest your money into mutual funds or whatever that have high fees and costs associated with them. So you're kind of getting a double whammy effect there. So make sure your advisor fees are low, and then make sure that they will invest your money into low-cost funds. So expense ratios are really just the tip of the iceberg when it comes to investment fees. But thankfully, the only fee you'll ever have to worry about when it comes to watching my videos is to hit the like button down below so YouTube knows it's a good video and other people should see it. If you haven't already, please consider subscribing to the channel. I want to help make you better with your money. And lastly, click on one of the 2 videos that's about to appear over here. They'll make you better with your money, and I'll see you over there. Simply put, an expense ratio is a management fee that Simply put, an expense ratio is a management fee that I said simply foot again. What the